Okay, great. Okay, so thank you for making it this afternoon. I'm just going to start by giving a layout of the interview. So we'll start with introductions. So I'll introduce myself, and then I will ask you to introduce yourself, and then obviously I will also do a little bit about introducing VOC and Hallam-ICS engineering. And then I wanted to also explain like the objective of this interview, that is broadly to educate and bring awareness of employee ownerships and ESOPs, employee stock ownership plans. And then the third section will be just setting the scene, and then we'll jump into the question and answer session. Okay, so a little bit about myself. So I'm Lizah, I'm a PhD student at the University of Vermont. I'm also a fellow of the Gandhi Institute for the Environment and the Leadership for the Ecozoic. My research interests are broadly at the intersection of global inequality. I'm also looking at the ecological crisis and cooperative economies. And currently I'm doing a summer internship with the Vermont Employee Ownership Center, also known as VOC, here in Burlington, Vermont. And my interests are around looking for social innovation in cooperative economies, employee ownership, shared wealth, and egalitarian institutions. So my interest today in interviewing Keith, who I'm so excited to have here, is to obviously bring, like I said, education and awareness of employee ownership, and specifically really wanting to speak to baby boomers or business owners who are thinking of succession planning and saying, here is a viable option, being employee ownership. So I'm going to ask Keith to introduce himself, and we'll carry on. Thanks, Keith. Take it away. Maybe start off with how you got into Hallam-ICS. Oh, Keith is also a UVM, University of Vermont alumni. So my connection with him, full disclosure, is also on that level. And really excited to have a CEO in my presence with a company that I will talk a little bit more about and why I'm interviewing Keith today. So Keith, take it away, introduce yourself, and a little bit about Hallam-ICS and employee ownership.
Okay, well, thank you, Lizah. Really glad to be here and talking with you as well. So a little bit about me. I was born and raised here in Vermont. Grew up and then went to the University of Vermont and studied electrical engineering. I graduated in 1989, and I was fortunate enough to meet Dave Hallam in the winter of 1988 prior to my graduating, and did a co-op internship with David over winter break and learned about the consulting engineering business. David was had founded Hallam-ICS as a consulting engineering firm in 1981. And in 89, I joined the firm in May. I've been with the company ever since. So it's my only professional company or experience that I've had since graduating from college 34 years ago. I received my master's in business administration starting in the fall after starting to work for Dave. I got my MBA studying at night while working in the day, and used Hallam as kind of my laboratory or source of information for many projects and papers. Dave was always open book and available, and sharing of information was always part of his foundation. So I've been with Hallam since then. I became the CEO in 2001 when David retired and transitioned out of the organization, or transitioned to the role of chairman of the board on a part-time basis. And I've been filling that role for the past 22 years. I'm currently the president, CEO, and chairman of the organization. Hallam is a 135-person engineering, control system integration, and commissioning and validation firm with 6 offices around the country, up and down the East Coast and now out into Texas. We are 100% employee owned through an employee stock ownership plan, an ESOP, and we are also a certified B corporation. We did recently become, I guess, December of last year, became a benefit corporation in terms of our corporate structure as well, indicating our belief in taking into account all stakeholders and not just making a profit for our shareholders. So that's a bit about me, and other questions from there, Lizah, that you'd like to go into.
Okay, great. Keith is being a little bit modest about Hallam. So I had done a little bit of research as well, and I just wanted to highlight the kind of company that we're talking about. So you did speak about them being a B corporation, but you left out that they were announced the best B Corp for the world for 2022. They are an ISO quality assurance company, so they adhere to those standards, ISO 9001, 2015. And the other thing I wanted to specify is how it is very clear from their mission that they are committed to being a positive force to improve the lives of their employees and communities in which they live and work on. So I just wanted to add that, Keith. I hope that's okay. A little bit about Hallam. I am super, super impressed, just even by going to your website and seeing the stories, and they kind of relate to some of the stories I'm going to be asking you to talk about later on, how people end up in Hallam-ICS, very interesting journeys. So I'm going to talk a little bit about the objectives of this interview, which I said earlier on is broadly to just educate and bring awareness of what an employee-owned business is. So most of the discussions in this interview, I will ask you to give like practical examples and really elaborate, so that if there's anyone who's out there who's going to listen to this series, they will be able to make, an informed decision, especially if they're a business owner or it's an employee, maybe someone like me 2 years down the line, I'm looking at, what company do I want to work for? And I think I would go for 100% employee-owned company at this stage. So it's generally to provide education and awareness, and also to amplify the work that Vermont Employee Ownership Center does here in Burlington, Vermont, where it really has a lot of diverse programs that are best suited to help employees to transition from being a private-owned company to an employee-owned company. So having said that, I wanted to start off by setting the scene and say research does show that baby boomers, and I also know Keith has written an article on baby boomers and the millennials. I think it was called, let me try, and it's called Hey Baby Boomers, Don't Blame Millennials. But I wanted to just give a little bit of stats on what's going on in terms of business owners having a succession plan. So a survey was done, and it actually shows that 60% have no plan, 35% do not find a suitable buyer, and 5% are the only ones who engage in succession planning comprehensively. So generally, succession planning is not easy, and coupled to this is the silver tsunami that is upon us. And we are seeing that baby boomers 55 years and above are reaching retirement, and in thinking about their relationship with millennials, I think Keith was the right person to kick off this YouTube series, judging from his article that he wrote. So Keith, I'm going to start with a question broadly around your story, maybe just your story. Let's start with your story, how you did explain earlier on that the 34 years of your career have always been with Hallam-ICS, but how did you end up in Hallam-ICS, and also what do you think was the motivation for the previous owner to transition from private ownership to an employee-owned company? So just your thoughts on that and your story around that. And I know you mentioned it to me before, but I really want you to explain like what type of a person this baby boomer, because we are like profiling, right? But let's talk about the real finer details. Who were they? What motivated them? And perhaps a little bit about the transition from being a private-owned company to being 100% employee, B Corp certified company today.
Okay. Yeah. So like I mentioned, I joined Hallam from college. I met Dave through my mom. So as I said, I grew up here in South Burlington, Vermont. My mom was a school teacher in the South Burlington School District. And when I was a senior in college, she had a second grade student whose name was Tyler Hallam, and Tyler was David Hallam's son. They were having a parent-teacher conference in the fall, and my mom introduced herself, and Dave asked Dave what he did. And he says, "Oh, I own an engineering company." My mom immediately said, "Oh, my son's an engineering student at the University of Vermont." And Dave said, "Please have him give me a call." And so that is how Dave and I met. And, Dave said, "Boy, I always thought if you had anywhere of the percentage of energy and excitement that your mother had and commitment to your profession that she had to hers, you would be a really good hire." So that was how we originally met. And I came to learn about Dave and Hallam while I was there. My wife, my wife, who was my high school sweetheart, we were dating at the time. We were engaged to be married. We both grew up in the area, and I was interviewing in Boston and Colorado, across the country, for electrical engineering positions. But we always knew we wanted to come back to Vermont. Vermont was a place that we loved. So when we learned about Hallam, we said, why don't we just stay here and never leave? And we were very fortunate in that regard, because as I came to learn over time, Dave was really an exceptional man. He started a company the day he became a professional engineer. And he did that because he wanted to create an organization where everyone felt they had a say in their future, and that they felt respected, but they could have some control. And that was really a great thing. I think he thought at the time he might be able to build an engineering firm of 6 to a dozen people in the state of Vermont. But his commitment to how he was going to grow it and what he wanted to be, I think, was really important. He always said that our business is 50% technical and 50% relationship. That means that you have to be good at what you do. We have to design quality systems. We have to be good engineers who understand the tools and are able to create a deliverable that our clients will pay for. But the relationship is so important, both with our clients and with our employees. And I think Dave understood that if you treat your employees well, they will treat your clients well. So he also had a really good understanding of the importance of ownership succession. So in that small percentage that you described, we were fortunate to have a founder who understood the importance of it and started to plan for his succession very early on. So Dave founded the company in 1981. In 1986, he took on 2 partners, John Butterfield and Bill Fife, and they owned half the company. So Dave was a 50% owner. Myself and 3 others became partners in 1995. So Dave had begun the process of ownership succession early on. And he had committed to his wife, Patty, that he would retire at age 55. So that was 2001 for Dave. So in 1999, we started to begin the process of evaluating how do we transition. Dave, even though he had taken on partners, and there were 6 of us at the time, he still owned a large percentage of the company. And that was a lot of shares that needed to be transitioned. So we looked at what our options were, and we said, well, we can continue down the path of what we're doing, which is taking on additional partners within the organization, which is very common within engineering companies and legal firm, law firms and accounting firms, where you take on partners and you grow that partner base. And a second option was to sell the company. At the time, the semiconductor industry was booming. That was where we were specialized. We were getting calls from companies on a frequent basis saying, are you interested in selling? And then the third was employee ownership. And that really was something that didn't come out right off as an option, but through our research and through our accounting firm, and I think our lawyers, they said, you might want to look at employee ownership. So the easiest path would have been to continue to take on partners internally. But we found a couple of things with that. One is it was fairly expensive to do. And secondly is there started to be some politics coming up in that process of who do you choose to be the next partner. We also saw that it concentrated wealth within a small group of individuals. And by 1999, we had grown to be over 130 to 150 employees. And we recognized that everyone was contributing to the success of the organization. And it didn't seem perhaps right that the wealth should be concentrated in a small group of that organization. So we looked at the partner side. We did meet with a few companies who were interested in purchasing companies such as Hallam. Never got too far in that. We found out pretty quickly, understanding the limited success or the challenges of mergers and acquisitions, but we also saw that we were going to lose control of the organization and the decision making. And I think everything that Dave had built in terms of the culture, the people, the beliefs, we might have gotten a good price for the business, but we would have lost, I think, that legacy of what he had built as an organization. So we pretty quickly moved on from that. And we then started looking at employee ownership. And lo and behold, we found the deeper we got into this concept, which seemed kind of complex at first, we found to be so consistent with who we were as an organization. It valued every employee. It shared wealth across the organization. We found that most companies that were employee owned had these wonderful cultures that were inclusive, that were open book, that were transparent, and really matched who we were as a group of people and as an organization. So in the year 2000, we made the commitment to become, with the decision to become employee owned, and created the employee stock ownership plan within Hallam, pre-funded it with some of our profits in 2000. And then in 2001, we had our initial transaction, which was 44% of the company was sold to the ESOP. And that was the beginning of our ESOP journey.
That's amazing. And I loved the way you compartmentalized the choices that were on the table, and how you then came up to employee ownership, which was a very reflective and insightful process for me, and I hope for others who are listening as well. I'm going to carry you on you spoke about employee ownership then becoming at that stage a good fit for the company culture that was already there, and also you recognize that it was able to sort of distribute the wealth across all the employees, which was something that you were also looking at. I wanted to ask you to just reflect a little bit and describe some of the benefits that employee ownership brings to the employees and to the business as well. Yeah, so I loved how you spoke about Dave. He always had in focus that the business had 50% technical and 50% was about relationships and people. So if you can just reflect on the benefits that employee ownership brings to the employees and to the business.
Yeah. So I think there are some really tremendous benefits that we see. And certainly there's been a lot of research done that has shown some of the performance metrics of employee-owned companies that exceed those or outperform our peers. in our benchmarks, but I'll just kind of share from our experience what we have seen is, even prior to becoming an employee-owned company, we had an ownership culture in place. And by that, what I mean by that is that every employee felt that the organization was theirs. And that was created through a couple of different ways. One is a culture of autonomy and flexibility. There's no micromanagement within the organization. And I often say when when I'm interviewing people, I say we're looking for intrinsically motivated, talented adults, people who hold themselves to a high standard and expectation. So we don't have to look after individuals, that they come in, and our employee owners are just a tremendously talented group of individuals who also are committed to doing good work. They want to provide excellent work for the clients and to build the organization. So the benefits that we get out of that, of creating a culture, and the culture is one that's based on openness, transparency, to create a foundation of trust. And that's trust between the employee owner and the organization, that it's a mutually beneficial relationship that we have. Yes, Hallam is in business to make a profit, but in terms of how do we make that profit, we've created a strategy that is focused on having local businesses working for local clients so that we can limit the amount of travel that our employee owners do, because we want them home at night, either with their families, able to attend children's games or plays, or to coach their teams, or to engage in their own hobbies and their own activities that they want, but to recognize that they have a life outside of Hallam, and that the balance that they have in their life will lead to improved work that they have when they're at Hallam. So the benefits that we get through it is a talented, dedicated, and loyal workforce. They put in the time when necessary. They treat our clients exceptionally well. So you get higher client satisfaction, you get repeat business from our clients, and also a lower turnover rate in our employee base. And that typically will lead to better financial performance across the board. If you have those core foundational pieces in place, that will lead to revenue growth, it will lead to profitability growth, it will lead to an increased share price. So those are some of the benefits that we derive from employee ownership.
Excellent. Wow. I'm like, I know that during my undergrad, I did learn about ESOPs, but it was like, like one of those sub topics. It's like not the main. And I remember having a discussion with a business, sort of an entrepreneur in Africa, and saying to them, because they were at the stage where they're starting to think about succession planning, and say you need to consider employee ownership, and remembering that this is something that one of the professors did speak about it, but it wasn't. Instead, we were like focusing on mergers and acquisitions, and and all those computations. So I'm so happy to be doing this interview and providing some of these information that you're speaking about. So you talk about one of the biggest debates that's out there, which is the employee of the future, and you speak about one who's like self-driven, motivated, balanced, have a good work-life balance, and that being one of the benefits of employee ownership and the culture of ownership within these employee-owned companies. But I wanted to ask, in terms of perhaps, how does that impact on profitability? Because one would think, I'm thinking of someone who's considering this and thinking, but if I'm to bring in my employees as owners, won't that sort of promulgate a culture of slacking, or what are the impacts? Also, having an egalitarian institution where decisions are made sort of in a democratic manner, what would be your response? Does that have a negative impact on productivity or not? Mm-hmm. And the governance as well, does it not provide like huge transaction costs to the business?
Yep. No, that's a really good question. I think I want to just take a step back for a moment and identify that employee ownership isn't what provides all of these benefits in and of itself. Employee ownership in and of itself is a means of sharing equity across an organization with all of the employees who create that wealth. But how an organization is run, how that employee ownership is manifested across the culture is different within each organization. And there are organizations who are employee owned who have one set of management structure and a culture, which is going to be different than another. And you have excellent and just socially conscious organizations that are not employee owned. And that comes from management, that comes from leadership. So being employee owned in and of itself will not create these benefits. You have to have a management style and management practices in place that believe in this. I've had people say, I want that type of culture. Let me, is it employee ownership that will get me? And it's like, well, no, it's what's in your heart. Like, how are you really going to run your organization? Employee ownership in and of itself does not create that for you. So there's that piece. So in terms of profitability, I think that if you create a structure, you create an organization where people are proud to be part of the organization, they believe in the organization, they want it to be sustainable, they want it to be viable. Those are the pieces that will lead to higher profitability. You're not going to have slackers in that kind of an environment. You're going to have people who have a commitment. They also have an attachment to the organization. And that says, I want this place to be successful. And I want to be part of that. I care for the people here. I care for what it stands for. And I care for the work that we're doing, both for our clients as well as for our community and for our families.
I'm going to go to something that is very close to my heart, which is the area that I'm really investigating around this sort of the transition from a private-owned company to an employee-owned company. And I want you to just explain a little bit about the ESOP structure, how it works, and then I'll continue with my question. But my question is around sort of shared wealth, and broadly speaking about sort of retirement, it's sort of the lifelong wealth, not only just, income, which is like a month-to-month, on a month-to-month basis, but the impact of employee ownership when it comes to retirement planning, the connection there. If you could explain what that entails when you set up an ESOP and some of the benefits. I have heard of great stories of where, workers who are sitting in a factory have retired and managed to retire with a substantial amount that, means something in terms of their retirement. So I want you to just demystify and deal with some of the issues around that, because I've seen other protagonists say ESOPs don't work, and they question, a lot of a lot about that type of model. So if you can explain how that works and how it translates to shared wealth.
Yes. Well, so there's a lot that you covered in there. So let's start right at the beginning, that transition from being privately held to being employee owned. We knew very little about it. And that one of the biggest challenges to employee ownership is it can be fairly complicated. There's a lot that goes into it, from plan design to plan administration to repurchase liability, repurchase planning. So we started off by hiring people who are experts in the field, people who had designed plans, who had run plans, had administered them. And we talked to other companies that were employee owned. And I think a couple of things that came out first and foremost to us. One was an ESOP is a mid to long-term benefit. And so it's not something that somebody is going to feel the financial benefit of today. It's something that is in the future. And we'll come back to that and how you manage that and what the impact of that is. But I think the second thing that was told to us is this doesn't necessarily change how the company is run. So there are a lot of people who say, oh, so when you're employee owned, that means that everybody has an equal vote and the company is going to change and I will no longer have control. And that's one of those education processes that you have to go through. And again, this can be consistent with your philosophy on governance and on management. But what we explained to our employees, what the consultant came in, they said, you have a job description and your job description today is the same as it is tomorrow. And whether, and today you're privately held, tomorrow you're an ESOP, but your job description, your authority, your responsibility does not change. So there is still a CEO. They have the same job description. They have the same responsibilities, the same authority.
Mm-hmm.
That did not change. My job didn't change from when we were privately held to when we became employee owned. Mm-hmm. I had my job and that was mine to do. Now, our culture is open book, open door, inclusiveness. That's Hallam's choice on how to run a company. But that's not an indication of employee owned. It didn't mean that the day we became employee owned, all of a sudden, every decision had to be made by every employee in the company.
Okay.
So that's an important distinction for owners to understand who are concerned about what will this mean to how the company runs. It's also important for employee owners to understand, oh, this is what could change. This is what's not going to change. So from a financial standpoint, the way the ESOP works is that every year, the company makes a contribution into the ESOP account. It comes out of operating profits. And typically people look at it from, and it depends how you design your plan, but typically we look at it as a percent of payroll, a percent of compensation. So the company can make a contribution similar to a matching on a 401k. It can be 3, 5, 10% of compensation that gets put into the ESOP. So let's say that a company chooses to make a contribution of 7% into the ESOP and you make $100,000, you would receive $7,000 into your ESOP account. Okay. And that money, it doesn't come out of your pocket, it comes out of company profits. Mm-hmm. So it's not free because you help to generate those profits. Mm-hmm. That money is then used to purchase shares that may not have been purchased yet, or in a mature ESOP, to purchase shares from those who have left the company and has now come to you. The company has a valuation that has to be completed each year by an independent valuation consultant, and they will come in and establish a share price for the or an enterprise value, which divided by the number of shares outstanding gives you your share price. So once a year, you get an updated share price. Now, so over the course of many years that an employee stays, and this is that mid to long-term benefit, somebody who spends 10 years working at the organization has 10 years of contribution. They also have 10 years, hopefully, of share price growth. When they decide to leave, typically a plan has a period of time before they start to receive their distribution. So in the case of Hallam, if you decide to leave, 5 years from now, you begin to receive your payments and your distribution, and that will be done over a 5-year period, 20% per year. Mm-hmm. So one of the things that does is it incentivizes people to leave the organization in a good place. Okay. So we have people, when they're planning for retirement, they typically give us a couple of years notice and say, let's start planning, let's train my successor, let's make sure that this is smooth, because my payments depend upon the continued success of the organization. Mm-hmm. So there's a self-interest in it for each one of us when we leave, to not just, jump and say, I don't care what happens in the future. Okay. The other reason why they typically have that 5-year period is they don't want people to see a high share price and say, hey, I'm going to get out now because I think the share price is going to go down.
So speculation. Okay.
Yeah. So it creates a mid to long-term vision or thought process for all employee owners as well as management.
Wow.
So I don't know if that answered your question.
Yes, it does. It does. It clears a lot in my mind. So I wanted to ask a little bit more again about the ESOP benefits. specifically, not just employee ownership in general, from the perspective of the governance. So what I'm hearing from you when you were talking about you still have your job, there's still company culture, there's still management, those things are still in existence. So from a retirement perspective, I find that from the little research that I've just done as an intern, most ESOP companies also have the 401k. So they like run in tandem. Can you explain why that is the case? Where you would find the company will have both the 401k and the ESOP structure as well.
Yeah, so that's a really good question as well. If a company can afford to do so, they'll try to maintain both a 401k and an ESOP. That may be challenging, particularly when they're paying off the loan that was used to finance the ESOP. So that match may not be in place, or they may get rid of the match and keep a 401k. We have both in place today. We've got the 3% match on the ESOP or on the 401k, and then we have our ESOP contribution. So it becomes a fairly generous retirement contribution. We recently had, and there's a couple of things that come into play here when you talk about one versus the other. Early on, there was some skepticism around the ESOP. Now, for us, we went into a downturn immediately after we did the 44% because we were concentrated in a very cyclical industry. It had nothing to do with the ESOP. It was our business model and our strategy. But I think there was skepticism around people that said, I'm getting this piece of paper that says my ESOP account is worth, 40,000, 100,000, whatever it might be, but am I ever going to really see this money? It's just on a piece of paper, where my 401k is more tangible. Like, it's invested in these mutual funds, and I know that I will have it available to me at retirement. But I don't know is how I'm going to be around when I retire. Like, how real is this? And then all of a sudden, as the ESOP matures and they see colleagues who leave and receive these payments, all of us, and they see that, we've paid out now several millions of dollars through the ESOP. It becomes real. It's not that monopoly money anymore. And so it took time for that to sink in across the organization. And it takes time for a 25-year-old who receives that statement to say, if I'm working for another 40 years, I'm not going to see this until then. In the meantime, I'm trying to pay rent and do all the things that I want to do. So that's where that mid and long-term perspective come in, and overcoming some of the skepticism. But we recently had a couple of employees who retired who said, I would not have been able to retire now if it wasn't for the ESOP. Like, the ESOP value is a significant part of their retirement savings and their retirement planning. So it allowed them to retire at the age that they did, rather than have to work several more years.
Excellent. I think that's one of the areas that, it gets a little bit clouded for people, and you've explained it very well. And I think the issue is on just, the savings culture. Like, it's hard and it takes a lot of financial literacy for people to understand that. But I'm gonna take it back to where we started with the motivations of the business owner. And I think it's coming out very clear from this conversation that if you are that business owner and you care about your employees and you recognize that it's important for the company and the employees to have a mutually beneficial relationship, then you want to look at employee ownership as a viable succession plan. I do want to though ask you, what are some of the challenges did you see, because you were there at the beginning and you are now the CEO of this company. Did you see Dave maybe struggle with, so that if there's someone out there who's thinking about this, they can have somewhere to start off and say, it's going to work out. It did work out for Hallam-ICS. You have grown despite even the challenges that you spoke about. What are some of those challenges within this transition that maybe a business owner should prepare themselves for. And yeah, we'll sort of be wrapping up with that.
Okay.
Yeah.
Yeah, so some of the challenges initially are educating yourself on an ESOP and what it means. And I know when we went through the process, I was a partner with, there were 6 of us. I was also a CFO at the time. I was like, okay, what goes into this? And there's a lot of regulations around ESOPs, and it can be relatively complicated to work through. So that, I think, as I mentioned earlier, engage the services of experts in the field so that you really understand what an ESOP is, what employee ownership means, what it will cost the organization, what are the things you need to have in place, but also talk to other business leaders who have become employee owned and say, how is this working for you? You know, what are the benefits? So one of the challenges is that self-education before you make the decision. There's a lot to learn. Secondly, operationally, for us, one of our greatest challenges happened shortly after becoming an ESOP. As I mentioned, our business immediately went into a downturn, and it was a very steep downturn that we went into, that it got to the point that, so we were 44% employee owned, but after 2 years of trying to recover from the business downturn, we had the 6 partners who owned the balance of the company, 56%, in a room saying, do we need to put money back into this organization to keep it afloat? Fortunately, we never got to that point, but we had that discussion. And one of the things that we asked ourselves was, if we were 100% employee owned, who would be writing those checks, and who would be guaranteeing, providing personal guarantees to the bank to keep the company afloat? And I think those are good and viable questions. For us, our answer to this was, we're going to build a really strong balance sheet so that personal guarantees of a partner are not required. And that when we became 100% employee owned, we did so in a manner that we were extremely strong financially. And as long as we managed the company well and effectively moving forward, that challenge and that concern would not be an issue. You know, some of the other challenges that you might run into depending upon your industry, and we talked through these as a board prior to becoming 100% employee owned, was how do we attract and retain some of our top talent in the engineering business, in the control system business. A lot of they're often partner based, and so your top performers become partners. They get equity in the organization. So would we be able to attract and retain that type of leadership within the organization? And we have, and many companies have addressed this by creating other compensation packages, either deferred compensation, synthetic equity, other means of providing that kind of return to their leadership. But those are some of the concerns and some of the challenges that we had. We also talked about the challenges of educating your employees on what it means to be an employee-owned company. And so forming an employee an employee ownership committee, an ESOP committee within the organization, attending functions, are all really important. But I do want to stress one of the real benefits that, one of the challenges of being a partner-led organization, a privately held organization, is that you're constantly thinking about ownership succession as well as leadership succession. As a 100% employee-owned company, we're not worried about leadership succession outside of the repurchase planning. We have the financial planning we have to do around it, but we can focus squarely on leadership development and leadership succession within the organization. And on our board of directors now, we have one employee owner who sits on the board of directors. That's a 2-year term. Anybody in the company can apply for it. But one of the most effective leadership development strategies we've had within the organization is we have 2 additional positions on our board that are leadership development positions that we select individuals who are going to be future leaders, and they serve for 2 years. And that's just been really a great opportunity for individuals to grow and to learn more. And of course, that supports our whole transparency. There's nothing to hide at the board level. We have employees who sit there, they tell their colleagues, oh, this is what we talked about. This is how that decision was made. But but really being able to focus on leadership development, leadership succession has just been so valuable. And to take that little piece of headspace that used to be focused on ownership succession. Okay, I've got 3 partners who are going to be leaving in 3 years. How are we going to choose and find? That's not there anymore. So that time and that energy is available to focus into the business and other areas. So again, I diverted and moved along. I hope that didn't go too far from.
No, it was spot on. It does help and illuminate some of the issues that differ between a privately owned firm and perhaps someone wants to transition into employee ownership, and the distinction between ownership succession planning and leadership succession planning, and the cost that it introduces to the business. And I'm just reminded of that conversation that I told you about, where this business owner in South Africa was thinking about, and I said, why don't you look at employee ownership? And I think their biggest concern was coming from, they hadn't done any ownership planning and leadership planning. So it was like a double issue for that particular individual. So thank you so much, Keith. I want to end on how you spoke about getting services from business consultants and service providers, and even non-governmental institutions such as VOC, like educating yourself, attending networking sessions, and really like that self-education piece, and saying how critical and important it is. And I also want to end on a note and say, for me, it's really not about employee ownership impacting culture. It's actually the other way. You've got to have the culture and then have the employee ownership piece of it. It's not reversed in any way. And I just wanted to applaud you. I went on your website and I was looking at the people. So I guess it's all the employee owners. They're like all of them are there, like their pictures. But there was one specific employee owner that caught my attention, and it's a standard poodle called Ruben. And I wanted to say that spoke so much to me. I'm just gonna read a little piece of Ruben so that everyone can catch in the why I'm so amused. So it says, yeah, I'm always excited to come to work at Hallam-ICS. It's such a friendly, fun, and tasty environment. My focus on quality control of office treats is my dream job. So the standard poodle is entitled Quality Control Office Treats. So it goes on to say, being a standard poodle, I naturally have very discerning taste, and I often must reject certain treats if they don't meet my high standards. Thankfully, everybody at Hallam-ICS understands the importance of quality and continuous improvement. My opinions are always received with a smile. It really touched my heart because my research interests are also around building eco-institutions, institutions that are socially, economically, and environmentally conscious, and make decisions based on values, and thinking about sustainable development, the future that we are leaving our children, nature, and so on. So on that note, I would want to thank you. I don't know if you have any questions for me, or not.
No, I really enjoyed our discussion.
Thank you, Keith, and thank you for sharing your knowledge, your experience, and hopefully we've managed to help someone out there who's thinking of employee ownership and ESOPs. Thank you.
You're welcome. Thank you.
Bye.
Bye.